All right, so the property here at 18 Leyburn Drive in Halls Head is the property that Ben has asked us to take a deep dive analysis on. So I'm going to be making the assumption here that we're diving into this property, assuming that this is a location that has been selected for a reason, whether that's high performance growth location or specific to your strategy. So I won't go into the overall local government area, the when and the where. Let's dive into this property at the street and the property level, and then we'll run through the due diligence checklist that we would apply. I am running through the step-by-step process, the due diligence checklist that we would apply in private advisory, some of the valuation and checks that we would do as part of standard practice. So let's start stringing this together. Let's get our bearings here, guys. This is 18 Leyburn Drive, Halls Head. Beautiful part of the world, actually. It's really coming, ahead quite strongly in terms of it's a south Perth region. Obviously, once again, this property has been provided to us to analyse by Ben, so this is not a recommendation one way or another. The property has been selected by one of you, our mastermind audience, to analyse for us. But just to get your bearings, Perth is up here in the north, Perth proper up here in the north, then we're going down past Rockingham into the Mandorah area. So Mandorah, just so we know, has a lot of oceanfront property. It has an internal lake system, and it has a canal system with a lot of canal front properties. You have a varied mix of low socio in parts of Mandorah, high socio, $1 million homes, oceanfront, really nice properties as well. So we have a broad mix. This particular property is wedged right against a golf course, which is generally seen as a positive driver of utility. And the marina system is not far away as well. Within 100 metres, you've got these, not marina, so the waterfront, canal front properties. So we are wedged between two really nice, strong gentrification drivers, uplift type drivers. And then we obviously have the ocean that's not too far away as well. So look, overall, we've done the analysis. There's no real core, risk factors around new supply entering into this area. Remember the ocean, CBD of Mandorah up here, or where the industrial employment is. A lot of these factors are right next to this property. It is in a very great position here, and there's no risk for infill, for further development between this and the primary drivers of utility. So it's ticking some boxes there around position. I just wanted to do some street level analysis. I won't do LGA level analysis here, if that's all right. So we're making the assumption coming into this property, one way or another, that this is in a high performance approved local government area and suburb. We've done that due diligence prior. We're coming in here at a suburb. So what's this here? Sorry, I'm just going to close this down. And I'll close this as well. So we've done that due diligence. We're coming in here primarily at a street level. I do just want to check quickly the vacancy rate for the suburb. 1.3%. I'm just getting my bearings here. The owner-occupier levels at a high level. We're generally wanting to see at least 2/3 there. Any recent growth that's occurred. Now, this recent growth figure might be slightly different to other figures that you see around the traps in other sources, etc. This is a rolling 12-month figure for houses only, and prices have been relatively stable. Slight uplift in more recent times, but they have been relatively stable, and we do like to see that. We like to have that firm base or even slight correction in the 12 months, 3 months prior. You can see that consolidation through that period in the 12 months. So we've got a nice flat bed to enter into. Let's just now look at the street level analysis for this property, and I'll just get my bearings. We are in this section up here in the north quadrant, obviously near the canal system once again and the Gulf. So we're squeezed in here into this segment here with 83.8% owner occupiers. So we are over the magic number. Obviously, this is all the due diligence and things that we do go into with our checklists, our tolerances with the Ripehouse Academy. And I will just give yes or no answers at a high level. Owner occupier levels are good, above our prerequisite tolerances there. Do we have lots of the in-demand property type? Essentially all houses in this streets area, and houses are the most common in-demand property type. Now, this gives you some idea, guys. We have this canal system here as a really strong driver of higher values. You know, 1.7, 1.15 are the median prices for these two street areas on this canal system. So that's even higher than a lot of the oceanfront properties here with medians, you know, one here of almost 900,000. It's far higher than the oceanfront properties. And that's really interesting because it might be, you know, larger, more, you know, higher caliber properties, you know, larger floor plans, etc. Maybe newer, recent developments, etc. But it is very established. There's no scope for infills. It, you know, from a very quick look, the land was well and truly already all built on. So we can't use these properties to justify value for properties that are in different street segments. We have to compare like for like. This street segment that we're in here at 510,000. You know, is dramatically different to the segment down here to the south at 369,000. So we have to be very careful looking at like for like when we're looking for comparable properties for valuations, and then also properties that are in the same street segments. Or similar street segments in terms of valuation. This pocket, once again, is also higher than average by the look of it. So the darker the pink, higher than average in terms of rental price, higher than average in terms of yield. So at around a $500,000 price point, you're getting 5.4% yield, which, you know, nationally that is extremely strong. And we have to be aware of public housing. There is essentially none to speak of in this street location. So we're actually going through tick, tick, tick. At a street level, this property is very well positioned, and now we do get an understanding of the, I guess, the landscape of values and, you know, how they do really vary across this suburb geography. So I am going to dive into, remember, LGA suburb level. We have just assumed that this is all okay, not saying one way or another it is correct. I know that you've applied the tools, etc., in one way or another to your strategy, Ben. It might not be for everyone, and that's you know, we do need to go through the system and apply the high performance location selection tool to be able to find those individual locations that suit your requirements. You've done your checks and applied it to your yield, your budget, your strategies. So, you know, it's not to say it is applicable to other investors as well. Suburb level, same conversation. Now we've gone down to the street level. I am comfortable. It's ticking all of my boxes. It is in a sweet spot location in terms of the suburb overall. But the one caveat to that is we have to be very careful when we're doing our comparable analysis. Now, with this actual property, let's get our bearings on this. You know, good brick construction. This is an interesting point. We don't have necessarily a preference for brick or weatherboard or rendered brick or faux brick or even asbestos sheeting. We don't have preferences overall. We have to be looking at the building materials that are accepted by the local area, potentially preferenced by the local area. But for me, it comes down to the actual numbers, the actual calibre of the deal, right? So if it is a weatherboard property, it might be $10,000 or $15,000 less to other similar comparable brick properties, or vice versa, depending on the location. For me, it comes down to the actual calibre of the deal and the condition of the property, what potentially could go wrong. And that's really important when we are not biased. We're not ruling out anything that is not brick. Because that's ruling out a huge percentage of properties across the country. We are trying to find the best investments. And so if we get a good deal or an entry point that justifies a different build material, then that is our focus. That is the opportunity that we seek out. So brick, preference one way or another, is moot for me, and it does come down to the local area and the actual calibre of the deal. So for me, you know, this is it's hard sometimes to gauge the age of these just on a simple photo, but probably around 40 years, maybe 1980s era, just with the particular brick. Very well presented, low maintenance property, double lock-up garage, you know, pretty original condition so far inside. Original condition, carpets look okay. You know, that looks like it's the way it's been cleaned and not staining on the carpet. Interesting setup here. Is that a bedroom with a ensuite without a wall in between? I haven't really seen that before. It is. It's a wet area. with an ensuite all in the one flow through. That's very interesting. It looks like a master suite as well, with a walk-in wardrobe of sorts there. So interesting floor plan. And this was the other thing that I picked up on this one as well, Ben, the internal garden, which is lovely when you're on holidays. I'm not sure how it would go living and maintaining that and looking at all the dead plants that I would inevitably have in it. You know, and it is essentially wasted floor space. You know, it is an internal area, assumably with some internal roofing or guttering, etc. It is an internal area that is essentially wasted space. It may be a feature, it may not be, and potentially with tenants it might become an issue. I haven't really seen that before. I'm just sort of processing that on the fly. Now, running through our checklist, we have got 25 ticks and 1 cross. The 1 cross was around the floor plan, and I only crossed that because we haven't, in this due diligence I've done, been able to look at the floor plan overall. For me, I want to see here that the space is useful, it is well used, the floor plan is logical and well set out. You know, some of the indications that are given to me through looking at these photos are potentially that it's not, right? You know, you've got a master bedroom that's potentially compromised because of internal plumbing. You'd probably have to put a wall in there and block it off. You've got an internal garden, you know, you've got curved walls, you've got, you know, you've got a lot of funny features and things around here. I would love to see a floor plan on this, but my asterisk next to this property is it's ticking all of our checklist boxes, apart from the usefulness of the floor plan area. I would say at a high level, there are areas that are compromised, potentially unusable, or, you know, not effective usage of space. Sometimes, once again, that is okay to proceed if you are comfortable, but you have to discount the floor plan. So if this is, you know, 220 square meters, you have to look at those internal spaces and potentially discount that down to a more, you know, a lower number based on the, you know, the deficiencies in the floor plan. If that master bedroom does have, you know, sinks, etc. on one wall, how would that impact people coming into that property? And you potentially need to go as far as removing this property or that bedroom completely. It just becomes a living area, because that's not really a functional bedroom, you know, with broad appeal for tenants and also other buyers when you have literally sinks along one wall. So you either got to do two things: rule it out as a bedroom and value this up without this bedroom involved, or factor in the cost of walling it off. You know, it might be $15,000 or $10,000, maybe even a little bit less. You know, so there's two things: potentially appraising it at three bedroom, 2 bathroom, or, as mentioned, putting, you know, a discount of about $10,000 for that. Block size is great. You know, we did look at this one. It is on a corner block. Shape of the block is not quite rectangle because it is cut off by the circular corner, but we, you know, even it is still nice, flat, usable space. And even if you were to sort of square the block off and cut these edges off it, it is still a nice sized block. So when we say, you know, generally rectangular shaped blocks, this is a rectangular shaped block with a corner cut off it. And there are benefits to being somewhat on a quiet corner. And so for me, this passes that test as well. You know, other commercial aspects, other street, you know, level elements that might, you know, detract from this property. Well, it's a golf course over the road. Generally, most people that you talk to see that as a positive thing. You know, you've got greenery, you've got lifestyle. You know, and if you're a fan of golf, you might be able to look over onto that green there and see their bunker play and all those types of things. So generally, golf frontage or close proximity to golf is seen as a positive, especially if you're going to be having tenants, etc., that are interested in golf. They can walk straight there onto that fairway and maybe have a hit. For me, yeah, it's ticking a lot of the individual street location blocks. We've done our power line checks, etc., flood checks, etc. It was all okay there. So look, I might dive down to potential for renovation, scope for renovation. What would we do here, knowing that we are trying to identify elements, and this is obviously all covered in the Ripehouse Academy information, identify elements that are potential for 3-to-1, 2-to-1 return, or at least more than 1-to-1 return on every dollar that we do spend on the renovation. For this era property, you know, it is neat and tidy. There's not a huge amount of things that we can sometimes do without over capitalising, especially in very tightly held, high growth or high pressure, price pressure locations, extremely tight vacancy rates. You know, you're going to have a line of tenants coming up the driveway into this property, whether it's unrenovated or renovated, and they might not pay much more for a renovated property in this area with the vacancy rates as low as they are at 1.3%. And, you know, I do know a lot of the market data for this area as well, and there's a lot of pressure. So, you know, we do have to be sensitive with renovations on properties at this risk of overcapitalisation. There is a comment there, Bernardo, as well. I'll get back to that in a moment. You know, it's probably outside of scope to come in and do any work here on this wet area. In scope, in terms of putting an internal wall there, you know, it's got a shower area as well. I didn't see a toilet. Potentially putting that toilet in there and turning it into a correct ensuite area. Once again, we can't see that floor plan. It isn't attached to the photos. That would be something I would look at doing, and definitely that would have, you know, a very strong return on investment, because you are getting a legitimate bedroom. You're turning a factor that is turning people away into something that's a legitimate ensuite and attracting people to this property. Sorry, I've just remembered I've got a mouse plugged in over here. Potentially looking at new carpets, window furnishings, very dating. You know, you can see these carpets are potentially very worn as well. I don't really know what to do about this internal garden area. You know, it might be a big job in terms of boxing it in and turning it into internal living space. That would be my preference. You know, it is a very controversial figure. You're probably going to have to do something with the tiles across the whole of the living area, though. If you were to replace this, you're going to have a big hole there in the flooring. Probably hard to replace these tiles. They do date the property. They are dark. I would look at potentially ripping this internal garden out and putting floating floorboards throughout the living areas at least, and new grey carpets in the bedrooms. Bathroom presents pretty well. Once again, with knowing what's going on in this area, it's probably overcapitalisation to do anything to the bathrooms. And once again, the kitchen as well presents very well. These internal brickworks, by the way, guys, you know, and these lovely furnishings above the kitchen windows that don't really serve any practical purpose. These are dating the property. You know, they really are pulling it back in terms of how it sits in people's minds as subconscious. And the internal brickwork dates properties, even this internal woodwork as well. Probably way outside of our scope to, you know, put plaster across this internal woodwork, which you'd probably think I'm crazy to suggest, but it really does date the property. But I have, and in the past, many times with clients and myself, plastered over internal brickwork to really modernise a property. That's something that I would consider doing. Obviously, there's a lot of internal brickwork on this property, and there's nice floating floorboards here. You can see how, you know, more modern and bright these floors look to these really, you know, old school stone tiles. Yeah, overall, probably look at the bathroom and flooring and the internal garden work. That's where I'd stay with this property in that order. That would be my preference for spending dollars through. Let's have a look at appraising this property. So the factors that I'm looking at are relatively good usage of the 792 square metres. I'm not going to discount it because we are on a block, dual access, it has benefits. 4x2, once again, there is going to be some discounting applied to that bathroom internally. I'm going to do a quick appraisal on this other computer over here just so I can do two things at once. So much more modern, 4 bedrooms recently sold for $610. Closer to the beach area, dated, so similar era but lower street appeal with some maintenance issues. Recently sold at 19 Glenclow Parade, similar size block, no images to speak of. 540 sold for 612 square metres sold for 580. Superior renovated internal condition mostly. So smaller block size, inferior, but much higher street appeal, much closer to the water. So that would be a superior property now selling for 580. Not many. So then there's an internal property that's sold for. So this is very similar, extremely similar. Okay, and I'm just going to have a look at the street location now. So So my primary comparable so far is 9 Alder, and so I found a superior for 580,000, but it is probably vastly superior. This one for me is actually coming up as comparable right off the bat. Okay, so we've got a similar block size. I'm not doing, within 50 or so square meters for me is similar. Okay, I'll just check the actual the street spot as well, but you can see here it's a very similar area of kitchen. It's the same stone flooring. You'd assume the same funny, quirky features throughout. Very similar internal condition to the property in question. Probably doesn't have an internal garden, but for me, it is extremely comparable. The actual street location, let me just quickly have a look at this one. And it did sell on the 23rd of November, so obviously it's a very recent comparable sale. The market conditions are obviously comparable, been only a couple of weeks away. So this, in the internal street location, sorry, I keep using here. So we are down in this south area of the property, and I'm just going to dial it up on this computer as well. So we're down in here. We're down in here with this comparable property. Properties in this segment are recently selling for 432,000. So we do have a distinct gap, $80,000, 20% difference for properties in this street location compared to this one that we're looking up here in the north. Now, obviously this is a street location, so it might not have a lot of properties turning over, so we might have a lot of variance or, supply, sample not reliable issues, etc. But for me, it is surrounded by other higher price pockets, and this is surrounded by other lower price pockets. So I would be strongly discounting this comparable 439. It's right smack bang on the median for this area, and it is very comparable. So if we know what we know now about street locations, we are instantly adding 20% on to this in the north and bringing this property right in line with the median for that street area, okay, because it is a vastly superior street location. So with that in mind, let me actually just look on a map view here, and I'll try and locate some properties that have more recently sold in that immediate area. So this is probably the most directly comparable property you can see. It's just on the north side of the golf course. Very sort of similar era, street appeal, probably a little bit more modern, wedged in on the block, similar block size, slightly superior internal condition. Similar market conditions, even though it sold 6 months ago, 5 months ago, the market's only moved a couple of percent from there. So I would be using this as a comparable and potentially my baseline of value, making arguments based on a superior property and the proximity to the golf course on this property that you could go up towards 460, 470, but really I would start my assessment of value at 455. That's where I'll be trying to negotiate below. That would be a good deal for me, especially when you consider that the master bedroom needs to be discounted for the cost of putting in that internal wall. That would probably break it, to be quite similar and comparable to this property. We do have the variance in prices, remember, across the suburb, but looking at the properties that have recently sold in this area, there are a separate tier of very superior properties in this street area selling for around 700,000 that are really sucking up that average or that median price in that street location. We do have this second tier of older properties in this street location at around this 450, 460, 470 by the look of it, which is where I'm seeing value on this property. But you've got to discount that by 10,000. So for me, I'm seeing a good negotiation result on this property at 445, 450, and I probably wouldn't go too far above that in terms of looking at it. It is ticking boxes all the way through. Apart from that floor plan issue, we are discounting the value of the property in proportion to it. Ben, how does that sit with you in terms of your analysis of the property? I'm just going to have a quick look as well at rental, what it would potentially rent for, and look at some comparable analysis there. It'd be great to hear your thoughts on this property. Just to finalise that, Ben. $5.50 a week looks pretty attainable. $6.30. No, $6.30. So close between $5.50 is confirmation here. So I'll be looking at $5.50 to $5.70 for this property on the rental market, just as a very quick analysis. And if we're targeting, you know, a $450 purchase price, let me just look at the yield, even at $5.50. You know, over 6.2% yield, which is in line, you know, on the higher side of the street area location. 5.4, but remember we do have some more expensive properties in this street location, more on this side of it, so you'd probably expect that, and confirmation of this is over 6% here. You know, so it's a beautiful, you know, high yielding property, even at this, you know, $450 plus price point, if we are expecting to get, you know, $550 to $570 a week in rent. So Ben, you've just mentioned, I agree with what you've said. That's good. It's good to have consensus. It's good to have argument as well, obviously, when we don't, and then dissect that together. And you've mentioned you think if you got it for $450K, it would be a good deal. That's where my head's at. Obviously, we haven't inspected this property, haven't done the on-ground due diligence. There's a lot more that we haven't covered with that due diligence, etc., in the purchase worksheet and processes. Hopefully that's been useful for you, Ben.